Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Alrighty, welcome to the U.S. Market Update. The S&P 500 closed marginally higher on Monday as President Donald Trump's officials met with their Chinese counterparts in an effort to resolve trade issues between the two economic giants. The broad market index added about 0.09%. The Nasdaq Composite climbed 0.3% to end at 19,591, while the Dow Jones Industrial Average ticked down 1 point to close at 42,762. Now, officials from the U.S. and China held trade talks on Monday in London. U.S. National Economic Council Director Kevin Hassett said that the U.S. was seeking confirmation that China would restore critical mineral exports. Shares of several semiconductor companies as a result of that meeting rose on Monday. Qualcomm jumped more than 4% after the chipmaker announced it will acquire semiconductor firm Alphawave for a cool $2.4 billion. And we also have shares of AMD adding just under 5%, Texas Instruments rising 3.5%, while NVIDIA shares ticked higher as well. Alibaba also gaining 1.8%. Well, to tell us more about it, we have on the line right now Christine Short, who's the Vice President of Research at Wall Street Horizon. Christine, thanks for joining us on the show again.
Yeah, thanks so much for having me.
Yeah, let's start off with the U.S.-China trade talks in London, shall we? Markets moved pretty modestly today following that meeting. What was the significance of those talks, especially around critical minerals?
Yeah, like you said, the markets only moved just slightly. We don't have a lot of information about what the outcome of those talks were. They continue again tomorrow, so we're hoping to hear more about, potential resolutions. But obviously, this has been a big sticking point this year. This is why their markets have been so volatile here. A resolution around many of these large trade policies. And so investors are looking for clarity here, especially with our largest trading partner, China, and hoping that there can, come to some resolution. As you said, there was some optimism when you looked at the semiconductors. That's a group that obviously would be big beneficiaries of a U.S.-China trade resolution. So investors are hoping for the best and hoping to hear good news when we get a little more information on how these talks are going.
Yeah, if China does restore critical mineral exports, Christine, how might that reshape the supply chain narrative in the coming months?
Well, some will say that some of the damage is already a little bit done just because of the volatility and the uncertainty that it's caused. But longer term, I think we just would have more clarity and kind of return to business as usual and, hopefully avoid some larger impacts that would have caused. But yeah, if you listen to some economists, just the uncertainty that we've had the first half of this year has been enough to maybe have more of a ripple effect. But we're hoping that, again, that we, get a resolution to this and that we hear more tomorrow and that hopefully things can turn around for the better.
Yeah, fair point. We have a lot lined up this week if we shift gears a little, getting two key inflation readings, the CPI as well as the PPI. What are investors hoping to see and what could potentially surprise them on that front?
Yeah, inflation's been moving, for the most part in the right direction. We've had, months of increases, decreases. Last month, CPI, we saw tick up about 0.2%, and that was after falling about 0.1% in March. And so it's been moving. However, after the last, over the last 12 months, the all items index increased 2.3% before the seasonal adjustment. And that's, we're getting closer to where the Fed wants to be, that 2% target. We also saw in the New York Fed survey of consumer expectations that was released this morning, the one-year inflation outlook took a significant dip in May, so down to 3.2%. That was almost a half percentage point decrease from April. So the expectations that consumers have of inflation are falling as well. So we're hoping to see, inflation continue to improve, move in the right direction. Even so, despite kind of all those readings getting better, the probability that the Federal Reserve will cut rates next week at their June 18th meeting is currently just about zero. If you look at the CME Group's FedWatch tool, they're not expecting a rate adjustment next week or in the July meeting. At some point, just a couple months ago, we were expecting the first rate cut of 2025 to come in the June or July meeting. That's now been pushed out to the September meeting. So if you look at the CME Group's FedWatch tool, the probability is for the first rate cut in September But again, that will, heavily depend on what we see in some of the inflation reports this week.
Yeah, let's take a look at the jobs and labor market. We had last week's jobs data painting quite a confusing picture. How should investors interpret the mix of weak ADP and jobless claims versus stronger non-farm payrolls?
Yeah, and as we know, this kind of comes into play with the Fed as well. We started out the week, we got 4 pretty big labor reports last week. The ADP report on Wednesday showed private payrolls adding just 37,000 jobs in May. That was well below the Dow Jones consensus for 110,000 jobs. The following day, initial jobless claims came in at 247,000. That was about 10,000 higher than the consensus estimate, showing more people were applying for unemployment. The 2 positive pieces of labor data we got last week were, of course, the big jobs report on Friday showed non-farm payrolls coming in at 139,000. So that was higher than the estimate for 125,000. Unemployment remained unchanged at 4.2%, so historically very low. That is considered full employment. We also got the JOLTS report last week, so job openings and labor turnover, and that rose 191,000 to almost 7.4 million, showing that there are still quite a few job openings here in the U.S. So, yeah, mixed data for sure. I think on the first 2 data points, when it was looking a little less rosy, there were some whispers about, will this be enough to, have the Fed cut rates sooner, either at the June or July meeting? But as I said, the CME Group's FedWatch tool, predicts that we're likely not going to see that until later in the third quarter. And I think it's justified seeing as the non-farm payrolls number came in so strong again.
Yeah, I know President Donald Trump intensified his pressure campaign right off the back of the release of non-farm payrolls, requesting Fed Chair Jerome Powell to reduce rates already. But that's obviously, as you rightly pointed out, not going to happen, was unlikely to happen until September at least. Christine, I'm curious, do you think there's growing pressure on the Fed to respond to weakening job data, or is inflation still the only thing that really matters to them?
I don't think jobs numbers have weakened enough to push the Fed to move. They've made it very clear that they want to see how the tariff increases kind of rinse out in the economic cycle. They don't have enough clarity now. It's too early, and none of the other hard data on the economy is really justifying a decrease at this point. They're just starting to get, where they want to with inflation. So they've continued this message of we're in no rush. And I don't think comments from President Trump, today he said he'd have his pick to replace Fed Chair Jerome Powell is coming out very soon. So that rhetoric has continued. Of course, Powell still has almost a year left on his term as chair. So I don't know that undermining him at this point serves the American economy well. But yes, Trump does continue to ramp up the pressure, but I don't think Jerome Powell is biting, and I wouldn't expect to see that impact the comments next week.
Yep, fair enough. So against the backdrop of what we've discussed, what should retail investors be watching most closely right now? Is it inflation data? Is it trade policy? Is it tech earnings? Or is it all of the above?
It's all the above, right? It all makes up the picture. I mean, the number one thing I do look at is terms of kind of the health of the U.S. consumer, which is 70% of our GDP, is the jobs report. Because the consumer, despite inflation, we've kind of rolled with the higher prices. Yes, the consumer has slowed a bit, but not to the degree that one would think. And that's because of the strong jobs picture. If that starts to break down, then you'll start to see consumers really hold back. If consumers believe they have a steady job, or that if they lost their job, they could go and easily get another one, they will continue spending. They might hold back or trade down, as we've seen a lot of higher income folks trading down to Walmart, or even, Dollar General has had some good reports lately, but they'll still be in play. It's when the labor picture starts to break down that you start to worry a little bit more about the U.S. consumer.
Yeah, I'll tell you what, some consumers were watching with a very keen eye. That was Apple's Worldwide Developers Conference 2025. It did feel, though, a bit underwhelming to many. Why do you think it failed to excite the markets, Christine?
This used to be like an event of a very high cachet, and the last couple have been a little disappointing. I think it really comes down to AI developments. They've been a little slower as compared to some of their peers when it comes to announcing AI improvements. They were meant to announce something about the overhaul of Siri, but they, admitted they needed more time to complete that overhaul. They, have been struggling to meet investor demands for, just innovation overall, especially in AI. So I think that was a little bit disappointing. They did announce some other, AI features. Apple, some of their AI features that can now identify what's on your iPhone screen, or their partnership with OpenAI to enhance their Image Playground app. There were some enhancements to what developers can use with their Apple Intelligence. And so there were some announcements, but it's really been slow and steady, and there hasn't really been that wow factor that I think investors are looking for. So I don't know if they're kind of playing it safe and a little close, keeping it a little more internal, because there have been some missteps over the year. But yeah, there just wasn't the wow factor. It was a bit of a snooze fest, and I think investors were looking for more on the opening day of WWDC.
Yeah, that's a fair point. I guess, well, it remains to be seen whether Apple has really fallen behind in the AI race or whether they're just playing the long game. But either way, it's been a pleasure having you on the show, Christine. Thank you so much for deconstructing the mood in the markets.
Thank you so much for having me.
Yeah, you're very welcome. Have a good one. That was Christine Short, Vice President of Research at Wall Street Horizon, and you're listening to Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.